Welcome to the Roy Morgan Weekly Update. I'm Julian McCran, the Roy Morgan Poll Manager, stepping in today for our CEO Michelle Levine, who is unavailable. The news last week was dominated by the Albanese government's first federal budget, delivered by Treasurer Jim Chalmers, and also the Moira deeming controversy in Victoria. For the first time in 15 years, the federal government is set to enjoy a budget surplus of just over $4 billion this year. The surplus is built on the back of iron ore, gas and coal. Strong commodity prices, especially over the last year, have significantly increased taxation revenues for the government. There's also been strong employment growth over the last year, which is also a big factor, and that has increased taxation revenues as well, personal income tax. The latest Roy Morgan employment numbers, which we released last week for April, showed more than 600,000 new jobs have been created over the last year. One of the key measures in the budget last week was the increase to the job seeker allowance of about $40 per fortnight and an increase of over $90 per fortnight for those aged 55 plus, the majority of whom are women. Federal opposition leader Peter Dutton delivered a budget reply speech on Thursday night, but although well received by some, this has made little impact on the weekly numbers we can see here. Although these were positive moves, as we will see soon, this hasn't moved the dial in a positive direction for consumer confidence. The interest rate increase of a week earlier is still clearly hitting consumers. On the other hand, the weekly indicators show a positive result for the Albanese government, with support up 2.5 percentage points to 57% on a two-party preferred basis, or a negative result for the coalition, who were down 2.5% to 43%, depending how you look at it. Government confidence this week was virtually unchanged at 94, still just below the neutral level of 100. Now we have 45% of Australians who say the country is heading in the wrong direction and 39% who say the right direction. There was no budget bounce for the ANZ Roy Morgan Consumer Confidence Index, however, which dropped 1.8 points to 75.9 last week and is now at its lowest for over 3 years, since April 2020 at the start of the pandemic. Consumer confidence dropped for those paying off their home to only 70.9, down 2.2 points this week, and it was down for renters by 4.1 points to 74.3. Interestingly, homeowners were more positive than a week earlier, with consumer confidence for this group up 2 points to 82.6, and clearly the highest of the three key housing categories. Inflation expectations were unchanged at 5.3 this week. Australians now expect annual inflation of 5.3% over each of the next 2 years. Inflation expectations have now averaged 5.3% for the last 8 weeks since late March. Finally today, we're looking across the ditch at our neighbours in New Zealand, who face a key national election in under 5 months' time. And the majority of them are now worried about interest rates. We ask many questions of New Zealanders on an ongoing basis, and today we look at the percentage of New Zealanders who worry about interest rates, which is up sharply from mid-2021. In June 2021, in the middle of this chart, just over a third of New Zealanders, 34.6%, were worried about interest rates. In response to rising concerns about inflation, the Reserve Bank of New Zealand commenced an interest rate increasing cycle in October 2021, and that continues to this day. During this cycle, the Reserve Bank of New Zealand has increased interest rates by 5 percentage points, and they're now at 5.25%. That is a far steeper set of increases than we have seen in Australia, and these increases have clearly had an impact in New Zealand, where the GDP shrunk in the December quarter of 2022, and the country may already be in a recession. A look at this question by housing category reveals some startling results. During late 2019, 2020 and 2021, as interest rates hit a record low of only 0.25%, those paying off their home had clearly the lowest concern about interest rates, well below homeowners and renters. In March 2021, at the bottom of the red line there, only 21.6% of people paying off their home were worried about interest rates, compared to 33.5% of renters and even more, 43.4% of homeowners, more than twice as high as those paying off their home. Soon after this, though, inflation began to rise, and it was understood and known that interest rates would also soon increase to combat the rising inflation. And we see concern about interest rates increased rapidly from that point, and especially for people paying off their home, which shot up over the last 18 months. By the end of 2022, nearly 2/3 of people paying off their home 63.3% were worried about interest rates, compared to around half of renters, 50.1%, and about half of homeowners, 49.2%. This chart shows that although interest rates are impacting all types of New Zealanders, those paying off their mortgages are being hit disproportionately from this series of increases. Looking forward to this year's New Zealand election, which is on a knife edge according to the latest Roy Morgan polling data, this is a key constituency that both major parties need to appeal to. Treasurer Grant Robertson is set to deliver the Labor-led government's election budget later this week, and all eyes will be watching to see what Robertson has to offer for New Zealanders being hit the hardest by rising inflation and interest rates. And that's a wrap for this week. Subscribe free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening today, and I look forward to Michelle bringing you the latest data on consumer confidence, inflation expectations and voting intentions next week. Take care and see you next Tuesday with Michelle.